Welcome back to 8 Spotlight, the show where we sit down with the founders reshaping the future of work, technology, and the infrastructure behind modern business. I'm your host, Samantha, and today we're diving into the evolving world of go-to-market intelligence with someone who is truly building ahead of the curve. I'm joined by Joshua Perk. Joshua, say hi.
Hey, Sam, thanks for having me.
Happy to have you. Founder and CEO of Vector, the YC-backed company transforming how businesses understand who's buying, even before a prospect ever hits their website. If you've been following the GTM world, you've probably heard of them. Joshua has built Vector into a pioneer of what he calls contact-based marketing, a world where companies don't just target accounts, but understand individual signals of intent across the entire internet. Today, we'll talk about product breakthroughs, navigating early retention challenges, category creation, and the founder psychology behind staying focused during the hardest parts. Josh, thanks so much for being here. I'm
That's
excited
mine.
to get into it.
Yeah, me too. It's been fun working with you guys, so I was really excited to get the invite.
We were really happy that you agreed to come on. Okay,
Let's get into it.
yes, let's start with the spark. What
Yeah.
was the moment or the frustration that made you realize that someone needs to build Vector?
Yeah. So the reality behind like actually starting companies, I feel like the victors write history, and like now I get to sit here and be like, oh, we had this like one eureka moment that we realized like go to market was broken. The reality is it's like it took us like 19 pivots to like find the actual thing that we wanted to solve. But the thing that was the true spark that led us to now the successful company that we're is that, everything in go to market was changing super quickly. You started to see cool companies like Clay and signal providers and AI SDRs and sort of like all of these things like come out of the woodworks at one time. And I had spent my entire career in go to market technology. I was a sales engineering leader at a company called Drift for a long time. And so it really got me thinking like, man, there's so much opportunity to figure out what this like new age of buying and marketing and selling and advertising is going to be. And so at the time we didn't know like what particular one niche we wanted to focus on, but we just said like, man, there's opportunity. Let's go figure out like what part of go to market is going to break and that we can go sort of build the next solution for.
And that makes sense. I mean, it takes a lot of pivots to figure out where you're supposed to go in the first place. And nobody really ever talks about that.
Yeah. No, it's easier, I think, to like to look at it in retrospect and say like, oh, we knew this thing that was going to happen. And now in retrospect, like we do too, right? We figured out what our North Star, and for us it took, 18 months of talking to users and figuring out what was already being built and what we thought we were too late to the game on before we finally realized like there was this huge piece that no one was thinking about, which was, contact level specificity. And like the thing that really opened our eyes is when we started to realize like, $48 billion a year is spent in B2B advertising, but B2B advertising was kind of built for like Web 2.0 when it was like humans researching and like you could get retargeted by cookies and there was an expectation that you'd fill out a form. And we're like, man, what happens when, 51% of the internet traffic is bots, which it is today, right? And what happens when it's 75, 90%? Like how is all this like advertising technology going to hold up when we're not targeting humans anymore? It's like bots that are doing the research for us.
So what was like your pivot journey that led you to that?
Yeah, so for us, our pivot journey, or like we started to figure out that there was like a category that needed disruption, but it took us a while to understand like where in that category we wanted to fit. So like during my time at a company called Drift, I was selling to a lot of CMOs, and there was this category of account-based marketing, and it was basically owned by these two big companies, 6sense and Demandbase, and they basically sold this vision that you could have account level intent and account level site dynamization and like service up these signals to marketing and sales teams and do like account level advertising. And I always noticed that the CMOs would be super excited and the sales teams would be really upset about it, and down to specificity, like the contact or the account level information just wasn't good enough for them. And so our initial thesis was like, what if we just do what these two companies did, but at the contact level? So like contact level site optimization, contact level intent, contact level advertising. And this was like generally the right direction. But what we found out along the way is like startups need to focus on one particular thing and do something super, super well. And so when we've looked at like the three different things that we were doing, we noticed that like contact level advertising was where a majority of our customers were getting the most value. And it was this like eureka moment because like we realized like what our customers were really nervous about was like what happens when like the internet changes and like humans aren't the ones researching anymore, and like how is our advertising going to be disrupted when like your retargeting breaks because cookies aren't allowed anymore, or it's an agent or a bot on your website and your ads don't work on them anymore, or like humans don't fill out forms. And so like that was the thing that really started to point us in the right direction on what we were building.
Very cool. So you were very early on recognized by Y Combinator as a top AI company.
Yeah.
When you look back, what did YC see in this problem that others weren't paying attention to yet?
I think one of the things that we figured out really early was that LLMs were going to be democratized. Like there was a lot of people in our batch that were building sort of around existing AI and existing technologies, and they weren't innovating themselves. And so for us, we were really trying to figure out like, well, what is a moat we can actually build that others aren't? And it came down to sort of data, like building out a unique data set. And so we really started to think about like, well, if our whole thing is going to be advertising and contact level specificity, we're going to have to figure out how to match identities and people to advertising accounts and website de-anonymization like really, really well. And
Oh.
so, we figured that out early, which is kind of what thrust us into that early AI recognition. And then on top of that, we kind of needed to figure out like, how do you build like highly distributed data sets quickly? And so one of the things that also thrust us into sort of like a household marketing name was like we were one of the first to do site de-anonymization for entirely free, simply because like we needed to start building out like our data sets of like tying identities and browsers together.
So, okay. So that's site ID, right? What you're
Yeah.
talking.
Yep.
So that took off very, very fast. That
Yeah.
had, I think, 770 companies in 77 days.
Yeah. Yeah.
Why do you think it resonated so instantly?
So we did. So one of the things that I think we recognized really early is that technology was getting easier at the time, right? Like AI was making it so like many, many people could start companies. And so, what used to be the differentiator in the 90s and early 2000s, like very few people could code, right? So if you could code something that was hard to do and like that was your moat, for us, it was like, man, everyone can code now. Like everyone can come up with an idea. There's like a lot of competition now. And so we leaned really heavily in the early days into like, how do we get distribution differently than other folks? Like, how do we market better? How do we sell better? And in the early days, like this is not a great like investor pitch, right? Like investors love hearing like we've got this technical moat, and like they don't want to hear like, oh, we're gonna win because we're better at marketing, right? Like this, like nobody likes hearing that. And that was our pitch. It's like, hey, we're gonna like the best companies in the world are the ones that are really good at distribution, and we're gonna be really
It's
good at
true.
distribution. It is, yeah. And so one of the reasons it resonated so well with folks is we built our first product and like gave it away for free. We literally just went out and we said like, hey, this makes no sense, and like other companies have built like their entire company on this singular product, but we're going to build the product and give it away for free. And we had a lot of trust that like our act two, like our second act, was going to be where we kind of cashed in on that distribution. So majority of time, if you're a marketer or a seller, you're trying to generate pipeline and sales and deals. And there's a couple different ways that you can do that. You can do advertising, you can do outbound, but almost everything in the digital age points back to your website, right? Like you drive people to your website as your digital storefront. But the problem is like a majority of us buyers and website visitors, we're really smart. Like we don't want to fill out forms. We don't want a sales rep cold calling us. And so, a marketer spends all this time and money driving people to her website, and then she can't convert them. Like she doesn't know who they are. They're anonymous. And so Site ID is a product that you put on your website that can basically like reverse engineer who somebody is when they land on your website, even if they haven't filled out your form. Yeah, borderline creepy, but very cool.
I mean, what isn't these days?
Yeah, it's not worse than what Google and Meta have on us. I can tell you that.
Exactly. Okay, then came Offsite ID, which
Yep.
identifies contact level intent off your website. How is that possible, and what's the core innovation there?
Yeah. So okay. So the next stage that we went through is like, okay, we know who's on your website. We can identify them, but there's this like known problem in sales and marketing, which is like a majority of buyers, when they're ready to buy your product, don't actually like come to your website. Like they do their research, they talk to their friends, they get like intros, right? And so you needed some sort of way to capture when someone was interested in something, like before they actually raised their hand and said that they're interested in it. So the way that that works is Vector partnered with basically these like large first party data co-ops. There's all these companies in the world that like when you go to Zillow or Forbes or Wall Street Journal and you visit these websites, they actually cooperate together and they basically share their first party visitor data. And so Zillow knows like it's Samantha and her device looks like a MacBook in a Chrome browser version 16.32, right? Like it knows all this information about you. It knows your identity and your device. And so we partnered with them and said like, okay, well, what is Samantha reading about when she goes on Forbes or Zillow, right? And so they had all this information about the articles you were reading, whether you're reading like comparisons. And so we're able to use AI to basically read what you read to classify like what you were interested in, what like the trends of your research were pointing towards. Yeah, it just gets deeper and deeper. You know what was interesting though is like, so these were like the two products that kind of like got us to that first part I was telling you about. Like this is when we still thought like we needed to be the like the everything platform where we needed site de-anonymization and intent and advertising. And like we still have these two core features in our product, right? Like site de-anonymization and intent. But we realized that our customers didn't know what to do with that data, right? We were like, Samantha's on this website and she's interested in your competitor. And they're just like, cool, what now? And a majority of them were like, okay, I'm going to take the information, I'm going to pump it into Clay, I'm going to put it in Salesforce, and I'm going to send her a cold email, right? And then, you know, a bunch of our customers come back to us and be like, hey, your intent data was super good, but like Samantha didn't reply to us. And we're like, yeah, because Samantha doesn't want to hear from you, right? Like Samantha doesn't know what you do, and she doesn't give a crap about the cold email you sent her, right? And so even though we had these like really cool, borderline scary innovations, like it still wasn't enough to build like a meaningful business. And so we went to all of our customers and we basically said like, I think we need a pivot, right? Like what do we need to do? What do we need to focus on? And we just got super lucky that, I don't know, 25% of our customers were like, no, we're having a ton of success. Let us tell you what we're doing with your data. And it turned out like the thing that they thought was super valuable with us is they were taking this intent data and the site de-anonymization data, and they were actually pushing our data into advertising platforms, right? They were taking like high intent people, building contact level ad audience segments, which like they weren't capable of doing before. Like if you've ever built like an ad on Google, like you can't say, I want to target B2B marketers. You say like, I want to target people searching these keywords. And so it was really interesting that like our customers sort of led us to like what we do now.
Cool. So, okay, you've built a person graph,
Yeah.
and that is powered by 400 million plus signals or something crazy like that.
Yeah. Yeah.
What is that graph? How does that factor into your pivot? And
Yeah.
why does it represent such a defensible moat for Vector?
Yeah. Okay. So this was like a super important part of our journey, which is like across like all of our pivots, the thing that remained true no matter what we were building was that like at our core, we were a data company. Like we had this really interesting data on people and their devices and the things that they were interested in. And so at the beginning, we thought that this data set was mostly for like intent, and we didn't really know like how to wrap a good product around it. And what we later found out is like by giving away the site de-anonymization product and by having these intent signals, what we had really built was this like graph of person information. And like the most important piece of person information that we didn't even know we had at the time was like we were building these like linkages between who you are in your personal life versus who you are in your business life, right? So you've got a business email, but you also have a personal email. And for us to like link that information together is like if I want to run an ad to you, like I can't target your business email. Like you didn't sign up for Google or TikTok or Reddit with your business email, right? You signed up with like your cell phone or your personal email address. And so we had built this like really interesting graph that was like growing every single day. We were processing like hundreds of terabytes of data. And even though like, again, the application of the graph changed through our pivots, right? Like by investing in this like moat of data, it meant that we could basically say problems can we solve for this? And it made that like pivoting journey much, much easier than most.
So the person graph came after you were talking to your customers and they led you to sorts like a more advertising platform?
Yeah, we had this concept of like, so if you want like the real story, like we We
I would
had
love
piv
the real
Yeah,
story.
so the real story is like way before we even identified like the ABM space, like our initial thing that we were working on when we were YC was like a relationship graph. Like we wanted to figure out if you could sell more things by leveraging relationships of like people that knew each other, right? So instead of cold calling or cold emailing or even advertising, right? Could you say like, hey, Samantha and Josh worked together at the same company for 2 years where they overlapped. And we were starting to get into like even creepy stuff of like their IP address was in the same office building in San Francisco for like these 90 days, right? So like we
Oh
had built
no.
this like we had built this like interesting relationship graph. And we like the technology itself was really interesting, but we had pivoted because what we found out was that like people just like don't like making introductions. Like when you think about it, there's a lot of like social capital there, which is like I can only ask you so many times to introduce me to like your friends and your colleagues. And so it was like a great technical idea, but it just had no sort of like business merit behind it. So we had pivoted, but we had this like relationship graph. And like when you think about relationships, like half of it is the overlap of people's jobs, but the other half is the people. Who is Samantha? Where did she work? All this sort of stuff. And so like we took this relationship graph and we're like sad and pivoting and trying to figure out what to do next. And that was when it hit us where it's like we already have this person data. If we could start to build like linkages to like who this person is in their consumer life, and if we can start to figure out what like their browser looks like, right? We can actually assemble this into what later became like our person graph versus like a relationship graph.
That's very cool. So you said the buyer journey is becoming silent.
Yeah.
What does that mean for marketing and sales teams today?
Yeah, I think so. The thing that I'm like most nervous about for marketers and sellers in like the journey today is I think like everything we see online is a temporary gold rush, right? Like you go on LinkedIn and you see this like, oh man, I use Clay to like send 50,000 emails to my ICP today, right? And then
Cool.
like you like scroll to the comments and you're like, well, what sort of like output did you see? And they're like, oh, I got like 2 replies. And I'm like, oh, this is brutal, right? So like we're in this like golden era where we're trying to use like automation and AI to replace humans. And I think with like any new golden era, the first initial application of the technology is almost always wrong, right? So like we have ChatGPT, we have AI, and people are like, man, I can't wait to send like Samantha 10,000 personalized emails, right? And like the problem with like all of this new innovation is it's actually like super rapidly changing the buyer's response to this stuff, right? So like if you think about like the last 30 years, we've seen this before, but not quite at the pace we're seeing it. So like 20 years ago, people were like, man, I can pick up the phone and call Samantha and ask her if she wants something, right? Telemarketing, right? When like our moms
Mhm.
and dads had like wired phones in our kitchens, right? And like that worked for a little bit. And like what's happened in the last 20 years? Now like millennials and Gen Z are like, I'm not answering anything I don't know the number of, right? And so like you see these buying shifts. And I think that we're only accelerating the next one, which is like cold email worked for one point, cold calling worked at one point. And I think with automation AI, it's only increasing like the rate that it will not work faster. And so yeah, buyers are retreating into silence. They're having like agents do research for them. They're not like the ones coming to websites anymore. If they are, they're not the ones that are filling out forums, right? They're doing all the silent research. And like the channels are getting really difficult to find them in. And so, for our marketing team, we've like done zero cold outbound, zero cold calling. Like we've invested all of our marketing energy into like building a great brand, building great content, being thought leaders, and then we invest in like bottom of funnel advertising, obviously, since like that's a big thing that we do is like how do we actually just like meet these buyers like where they are while they're scrolling through TikTok or Reddit or Google.
So you were very candid about going through retention challenges early on.
Yeah.
What happened and what did you learn about ICP and value consumption?
Yeah. So a bunch of stuff happened. One is like, as you can probably tell, like our company is very like we lean for authenticity first and foremost. So like the first thing we did was like call our customers. My head of solutions, her name is Allie. And like when we went through this pivot, she's like, hey, we have 300 customers, right? Like, how are we going to tell them that we're going in a different direction? And we're like, guess we're doing a road show, right? So like we scheduled 300 meetings where like her and I went and spoke to every single customer. And we basically said like, hey, here's what we thought we were building. Here's why we were wrong about that. And for most of our customers, this wasn't surprising to them, right? They're actually like, that makes a ton of sense. Like we bought you for this reason, but it also wasn't working. So it's not like they were surprised by the fact that we were pivoting. They're like, and so because of that, I felt like there was just a level of trust where they're like, okay, like, thank you for your honesty. Like, what are you going to do next? Right. Like, I still have this problem. I still have a pipeline problem. I still need to sell stuff. So, like, as long as you guys stay in this space, like, we'd love to see where you go next. And so what was interesting is like, we kind of assumed that like, man, we're going to lose like 75% of our customers by like pivoting away. I think we lost like less than 20%.
That's incredible.
Um, yeah. In fact, the opposite kind of happened, which was like we almost had to like let some go as we shifted our ICP and our focus. And we, we're now in a place where we're really focused on like repeatable motions, growing the same thing over and over again. It's really difficult to say goodbye to like revenue, but you start to think about, you're like, man, how much is it costing us to have this customer that's like not a good fit, or we're doing like, you know, acts of God or bending over backwards to make them successful when like we have this other ICP cohort that's like being much more successful.
Vector now has over 5,000 free installs and
Yeah.
300 plus paying customers. What drives an account to naturally graduate from free to plus to growth?
Yeah. Yeah, super good question. This was an exercise that we actually had to like proactively go solve, because the reality is at first there was not a natural maturity curve between our two plans, right? Like they felt very disparate. So like for those listening, we had two plans at the time. One of them was like site de-anonymization. You could put our pixel on the website, it would de-anonymize who's coming to your website. And then the other one was like our whole platform where you could do like contact level targeting and advertising and all this sort of stuff. And there was like this huge disparity, not only between like, why would I go from your $400 plan to your $36,000 plan, right? Like there's this huge disparity in costs, but also a huge disparity in like who bought it, why they bought it, all this sort of stuff. And so fortunately, we have this incredible product marketing leader on our team, Alex, and she took this whole project under her wing, and we did a couple things that created more natural maturity there. We basically said like, well, what is the connection between these two? Like if I'm a marketer, why would I start with one and move to the other? And what we realized is like, yeah, we had this product that could do site de-anonymization, but if we change the messaging and said, you know what it's actually doing is site de-anonymization of people who clicked on your ads but didn't convert, right? All of a sudden, like that framing, even though it's the same thing, right? You put a pixel on your website, de-anonymize who's coming to it. When you say put a pixel on your website, see who's clicking your ads but is not converting, that like small framing, and even though it's like more niche, people were like, this is for advertising teams, right? So all of a sudden, the people that we saw sign up for the pixel were performance marketers and demand gen marketers, which means they're in the app and starting to see like the gated things where it's like, well, Vector's showing me who's clicking my ads, and there's this gated thing that allows me to like better target my ads. So there was this like natural feedback loop where, marketer goes in there, puts the pixel on, and you're like, man, half these people clicking on my ads are not my ICP. I wish there was a better way I could target them. And you're like, oh, that's what the other product that Vector has does, right? And so like we really had to figure out like how to build that narrative. And it was interesting that it didn't require us changing the product a lot. It required us changing like the narrative of the product.
It's really cool.
Yeah.
Yeah,
Yeah.
I like that. That's a really cool bit of advice that I haven't heard before.
Yeah. It was I wish I could take credit for it, but that one was all Alex. She is like a master at this stuff. She also like went and repackaged like our pricing and all that. We did like the classic founder thing where we're like, I don't know, we'll price it however much people will pay us for it.
Real.
Yeah, and she also like during the same exercise where she figured out our narrative, also figured out like, well, what is the unit of value that people buy each of these plans for? And like that's the thing that should be variable. And so yeah, she really unlocked a lot for us.
Awesome. So, okay, moving on.
Yeah.
You've raised an oversubscribed round in March, and I've gotten leave to say this. You haven't mentioned this publicly yet, but I understand you've gone even beyond that.
Yeah.
What do you think investors saw that gave them conviction in this category?
Yeah. I think a couple things. One is there's any great company is born out of like another category or disruption, like breaking the way something previously worked. And so I think that, we saw a lot of companies get born out of like the AI space. Like everyone knew that there was this like accelerant of like, okay, how is AI going to change this whole category? On top of that, we saw some like really I think our investors saw that the way we were able to like get distribution, the way we were going to market was just unique and different in how others were thinking about sort of like building go-to-market organizations. And then I think finally it's like marrying your North Star to like what your product can actually deliver. So it's like it's one thing for me to like walk around in San Francisco and say like, hey, like the internet is changing and the $48 billion advertising space isn't built for the new agentic internet. But then to actually have a great technical product that has a really strong data moat that can fulfill, like convince investors that like you are the answer to that impending doom that is coming is like super critical to raise money from great
Mhm.
partners.
Yeah, that makes sense. Convincing investors of anything always requires some certain amount of doom for the future.
Yeah, yeah. I think it's like a really great framework. My head of marketing, Jess, she taught me this really interesting thing, which is like a lot of founders want to convince investors and prospects by building a category, right? Like they want to name the solution of the
Mm.
thing that they're trying to do. Like when I was at Drift, it was like conversational marketing, right? Like in the future, marketers will have conversations with people. Like we really were obsessed with naming our solution. And Jess introduced me to this concept that I think is brilliant and I think investors really respect is like naming the problem. So like for example, like journalists do this a lot. Instead of all of us felt like Gen Z is lazy and like COVID and remote work is like making our workforce like really lazy. But journalists were like, you know what that's called? Quiet quitting, right? Like they named the problem, right? Like they named the feeling people were having, like whether we agreed with it or not, like they gave it a name that all of us were then able to say like, oh yeah, that's the thing we're feeling. And I think that that's a big part of what has made us successful is like instead of like being selfish and naming our solution, like we name our problem, right? So it's like marketers have pipeline anxiety, right? Like they have a big number of pipeline to hit, they need leads, and they like don't know how to make sense of it. And there's like a million tools in the market that are promising that they're the answer. And so like we just walk around being like, hey, you're probably having pipeline anxiety, right? And like before you even talk about your solution, right, you just convince that investor or that buyer that like you understand the problem more than anybody else, which means you're more likely to understand like the solution better than anybody else.
Yeah, you hit the nail right on the head. I've never actually put that into words before, but that definitely is what separates a really great pitch from a really good pitch.
Yeah, yeah. Again, I can't take credit for it. I just got all these. I just hire really good people around me, and they make me sound smart.
I love that. That brings me to early startup hires. You're
Mm,
a 19-person team now, which is crazy.
yeah.
What qualities do you look for in early startup hires, especially in engineering, GTM?
This is like such an interesting question. I feel like we could spend just an hour on like what
I
early
know.
hires look like. But I feel like there's been a spectrum, and like as we get into like our next chapter of growth, like my answer's changing even further, right? So like our first five hires were all about like scrappy, like just stick to itiveness. Like you really have to like look in the mirror and know you're crazy about being at an early stage startup and like be okay with it, right? And like that's what we had in our first five hires, right? It was just people that were just like working insane hours, like they were really bought into it, they were really well incentivized, right? We gave them tons of equity to make sure that they felt rewarded for this like journey they're about to go on. And then what was interesting is like as we got bigger, or you still need that. You still need people that work really hard, that understand it's a startup. They understand it's not a 9 to 5. Like one of the questions I ask in all interviews is like, hey, you're super talented. You're really smart. You're obviously very qualified for this role. Like, why the heck would you want this one? Out of all the places you could go work and probably make more money and have like a better personal life, like why this one? And the answer to that question is always very telling. Right. Some of them have like a immediate answer. Some are like, I don't know. I'm looking for a job. And you're like, that's probably not this one. But as we've gotten more mature, like we still look for that hustle, but we're also starting to look for people that like challenge our move fast and break things mentality, right? Because like, before we would ship hundreds of lines of code, every hour or two into the product, but you get to a point where it's like now you have thousands of customers, you have to be a little bit more careful, right? And so now we're starting to hire people that like still get the startup mentality, but also have a little bit more maturity on like how to not just like break things and ruin your customers' days.
You've coined a new term, contact-based marketing.
Yeah.
Why did the market need this term, and what problem does it solve that others never could?
Yeah. Okay. So first of all, like category creation is like, it's hard, like, very, very hard, and, I had, like, a personal chip on my shoulder that it was something I wanted to do because I'd been at a company that did it really, really well. I've had a couple conversations with Brian Halligan, who's the CEO of HubSpot, and, like, he's told me that, like, we got very lucky that the first category we tried to create, like, we were able to create it because majority of time, like, even at HubSpot, I think they tried to create, like, 9 categories and, like, 2 of them stuck. Like, it's very, very difficult to, like, find not only the right phrasing of a category that like people resonate with, but then also like distribute that category name enough to make it stick. But like the reason contact based marketing, and now we're trying to like coin contact based advertising, like the reason that that worked so well is one, it had something to compare to, right? Like account based marketing, ABM was already something people understood. And so like to pick a good category, it has to be something where you hear it and you're like, I know what that means, right? Like HubSpot did a great job with that with like inbound, right? Like people knew what outbound was. And at the time, like, and to be honest, like now we use the word inbound like Kleenex and tissue. Like you don't even realize that was like the category HubSpot created because it was so understood and universal of like what it meant that we still use it. And so like it was this natural extension where it's like all these CMOs knew what account-based marketing was, and so changing one word on it, you're like, okay, I understand what based marketing is. I know what account is, and if I can just swap the word contact, you're like, okay, I get it. Everything else stays the same for it. And so we knew that the category had a good chance of sticking. We also knew that there was this like timing mechanism of the category that was great, like that, and that's the other component. Like you have to have a phrase people understand, but it also has to be the right time to introduce the category. And account-based marketing had been, I mean, technically account-based marketing's been a thing forever, but it had been really hyped for like 10 years. And we were starting to get this trend from our prospects and our customers that they were over the vendors that use the term, right? Like 6 Sense and Demand Base. They were kind of just like tired of these like legacy companies. And so we're like, hey, instead of like attacking 6 Sense and Demand Base, like what if we attacked the category that they stand for, which is account based marketing? The timing worked out super well, and like customers knew exactly what we meant. And like a big thing for us now is like category defense. Like there's lots of competitors and other companies now using this terminology, right? And like we spend a lot of time and in energy investing in content and enablement so that like we remain like the owners of that category.
So, what does spending that time and energy look like to maintain that defense?
Yeah, like I think a good way to like visualize the investment in category creation is to look at like a marketer's budget and like how it's typically spent versus like what we spend, right? So most marketers are like early stage companies, like one, their first marketing hire is typically someone like a product marketer or a demand gen marketer. For us, it was a content marketer, which is like very abnormal, right? Like it was a very early sign that we were going to make an investment into building a community in a category. Next was like, okay, when you get this marketer in place, no matter what the title is, you typically see like a lot of bottom of funnel investments, dollars being spent in cold email outreach, dollars being spent in advertising, right? Like very bottom of funnel, last mile demand gen capture. We spent all of our money in content creation. We were making like videos super early. We worked with this agency called Deadpan, which they make like ridiculous like funny B2B videos. So they would like for example, we wanted to like make fun of like the extents that marketers would go to try to get in front of their ICP. So we did this like video series where it was like a woman like jumping like out of your bushes and like hiding in your bathtub, and like a guy opening up his luggage, and there was like a marketer that would jump out and be like, I've been trying to get a hold of you. Like we did like a bunch of investment into content around the category. And so like that's one of those things though where it's like it was a big risk, right? Like a lot of CEOs are not willing to invest in that sort of like slow burning, long tailed investments because they want the here and now. Like they want the like, how do I pump a bunch of emails through Clay and send cold emails, right? Because like you feel like that's the easier answer when in reality it's the harder answer. Like you're better off investing in your brand and your content.
So, if Vector is ultimately successful in taking over this category defining genre and everything that you're already successful, but let's say you completely take over the market. What does the world look like in 5 to 7 years from now? How will revenue teams operate differently?
Yeah, it's a good question. And I feel like it's funny. 10 years ago, if you said, what does the world look like in 5 to 7 years? You'd be like, yeah, I can put my finger on what it looks like. 5 to 7 years from now, with all of the advancements we have, like, I don't know, flying cars, like I have no idea. But no, like the reality is like AI is going to continue to disrupt the way buyers buy. Advertising is going to continue to get disrupted. And so I see a world of like hyper personalization, hyper awareness. And so, instead of a marketer throwing up like one ad and hoping 1,000 people resonate with it, I see a world where you pump in a bunch of data about what people are interested in, and it's like hyper personalized to where you are in the journey. And like you see something that no one else sees when you scroll through TikTok or when you scroll through LinkedIn. And the only way to do that is to like essentially take the human out of the like one to many piece and do like automation on the one to one piece. Like think like we're mostly focused on the digital side of things, like what you see through LinkedIn and stuff. But like I bet you 20 years from now, there will be like you'll be walking down the streets of like New York or San Francisco. There will be like a billboard with a camera in it, and it'll be like, that's Samantha. And like Samantha's interested in this. And like all of a sudden the billboard like personalizes itself to like what you are interested in, which would be the most creepy thing ever. But we've also seen stats that like the new generation cares way more about personalization than they care about privacy, right? Like when I get a Hulu ad that's in Spanish and I don't speak Spanish, I'm like, what? You know who I am. Like, give me an ad like that I'll resonate with. Like there's more frustration and lack of personalization than there is like anything else.
So, how do you personally stay motivated when you're navigating churn, product reset moments, like when you were building heads down for PMF for months? Like, how did you stand that?
Yeah, I think like the answer for me and my co-founder is different than a majority of like younger early stage founders. Like we weren't in our 20s when we went to YC. Like I was in my like early 30s, like he was in his early 40s, and like we had done some stuff in life up to that point. Like we were both in the military. We'd both seen war, right? Like when you when you have like perspective of some of these things, right? Getting a call in the middle of the night being like we're pivoting is just like, yeah, okay, we'll figure it out, right? So like I think even though that's an anti-pattern of a majority of early stage investing, I think like investing in founders, especially now that like technology is easier and distribution is harder, like investing in founders that have experience sort of like building through tough things is really important. And then I also just think that like dynamics of founding teams are super important. Like my co-founder and I, Nick, we've had plenty of arguments and frustrations and disagreements, but there's like never ever been a moment where we're not sure if the other person is as invested in what we're building as we are. And I think that that's like that's so important. So I don't know. There's as crazy as it sounds, there's never been a moment where I'm like, man, is this the right decision? I just like one foot in front of the other, we'll figure it out. I think that like if you can put stress aside and just think about what do you actually need to do? Like my friends all the time are like, man, I really would love to like leave my city and move somewhere else, but I'm like, I can't. And I'm just like, why? Why can't you? Like, what stops you from grabbing a U-Haul and putting your stuff in it and like finding an apartment and putting a deposit down, right? Like, you can do those things. You're just nervous to do those things.
Exactly. So, what advice would you give to founders who are going through retention challenges or pre PMF turbulence?
I think first and foremost, like the lies you tell yourself are the worst ones, right? Like I've been in plenty of scenarios where like my customer base and my retention was telling me that we weren't building the right stuff. And I was always like, well, we just need to change this one thing. And like we're one pivot away from doing this. Like listen to what the world is telling you, what the data is telling you, and like don't lie to yourself. And I think just realize companies run out of energy way more frequently than they run out of money, right? Like every friend I had in YC that has like shut down shop like didn't run out of money. Like they might have gotten close, but they ran out of energy long before they ran out of money. So take a breath, step away from it for a day, and then like come back and realize like it's not your money that's going to make you die. It's you giving up on like finding product market fit that's going to make you die.
So, okay, what does Vector look like 12 months from now? What should customers expect next?
So a ton from us. Like we're improving our ability to do content level ad audiences. We're increasing like the volume that we can do. We're getting into like the ad attribution space. We're looking at like how we can get more data from people that are clicking or seeing your ads but not coming to your website. So starting to look at device matching on the impression side. And so we're just going to continue to give our customers like more and more access and insight into better advertising, better visibility, so that they can run more and more of their advertising programs with us.
Joshua, this has been such an exciting conversation. Anyone listening who wants to try Vector, you can visit vector.co, C-O, not C-O-M. Thank
Yep.
you. To get started with Site ID or explore Offsite ID or any of those other fun things. If you're a marketing or sales leader navigating noisy intent tools, you definitely want to follow Joshua on LinkedIn. His posts are some of the most thoughtful in the category. Josh, thank you for joining us.
Thanks
I
for
can't
having
wait
me,
to see what you
Samantha.
guys build next.
Thank you.